there, traders and investors. Bennett Tyndall with tradinganalysis.com, and this is your weekly Tuesday night market update. And as always, every Wednesday, 8:45 Eastern in the morning on Todd Gordon's YouTube channel, we have our TA Live Wednesday live stream show. Todd, Terry, Alex, myself, the whole TA team, we're live 45 minutes before the market open. It's always a good time. We've had some really interesting and fascinating guests in the past, so we hope that you'll take the time to join us for that. So last Monday, we had news out of Pfizer, and it was regarding their coronavirus vaccine. The coronavirus vaccine out of Pfizer was 90% effective in their trial patients, and the market reacted very favorably in the pre-market. And in fact, many of the beaten down names and industry groups that had been affected by the coronavirus shutdowns started to catch a bid, and simultaneously we saw a somewhat of the stay-at-home work from anywhere trade begin to unwind. This was evident in shares of Peloton as well as shares of Zoom. Some of those moves we feel are a bit premature and a bit of an overreaction, okay? But this week, we actually saw news now out of Moderna. Moderna, again, with coronavirus news, coming out with, I believe it was a 94.5% effective in their trial patients, or 94% effective. And once again, the markets did react well. But overall, we're still kind of trapped under this major resistance trend line, which we feel we're gearing up to break through it and finally leave this corrective madness behind us. So looking at the S&P 500, and we've discussed this before, starting in January of 18, we actually entered a correction. And this is an expanding volatility pattern. You have lower lows being established, you have higher highs, and the trend lines still remain intact. But perhaps, just maybe, we're gearing up to finally leave this corrective madness behind us and accelerate through 3,600 plus, 3,650, 3,700, and take us into our upside projection zone near 38 to 3,900 in the S&P. It's entirely possible. We like to view the markets through the lens of Elliott wave. And looking at this here on the weekly chart, I'm going to take you down to the daily. And you'll notice this trend resistance line was the resistance spot on September 2nd. It was also resistance back on November 9th, which is last Monday going into the news out of Pfizer. And we're now in some sort of an ABC or WXY complex correction, which we do feel has the legs to set us up for continuation through this zone. So be sure to join us on tomorrow's live stream. We'll be talking about this chart in greater detail, so we hope to see you there. Now let's talk about shares of Tesla. Tesla came out with news last night regarding, drumroll please, the fact that they're finally now going to be included in the S&P 500. So starting on December 21st, Tesla is going to be added to the consumer discretionary sector. And I want to look at this chart on the daily time frame, and you'll notice that going back to June of 2019, Tesla was trading at a split equivalent of 35.26 because we did have the split. We had a monstrous move up to 194. We pull back very sharply along with the markets into the March low. That represented a standard 61.8% Fibonacci retracement of that move. From there, we enter another beautiful five-wave rally. You have corrections of the same degree squaring up to one another in regards to the magnitude, the percent correction. And then we entered a consolidation off of the September 2nd high, which if you'll notice, this fifth wave completed right into your traditional 2-4-3 Elliott trend channel. We've now been in a sideways consolidation, which we do feel has legs to resolve significantly higher. It looks like the initial reaction to the inclusion in the S&P was a bit of a false break. The trigger point for us is a move through 465.90. That's when we can start to safely look at the idea that we are resuming the uptrend and that we're out of this sideways correction. But overall, this is an extremely healthy and bullish looking wave structure, and we're very excited to see where it takes Tesla. Taking a look at this back on the weekly, you'll notice that if we were to take a measured move, so if we were to measure the magnitude of this advance, project it into the June of 2019 low, that would take you up to around $964 a share for Tesla. Taking you off the weekly down to the daily, what's really rather interesting about that particular upside Fibonacci projection is the fact that this structure here inside of this green third wave also has a very thick zone of upside projection just over the 1,000 handle. So is it possible that we're gearing up for a near double in Tesla? It's definitely not out of the question. A very healthy looking chart. We're looking for potentially one final push back down to this consolidation trend line. At that point, buckle up. Things could get very interesting for Tesla. That's it for tonight. Be sure to join us tomorrow morning, and we'll see you on next week's video. Have a good one, traders. Good night.